Well, good afternoon, Maverick traders. It is Market Roundup time. Joe with you here. It's June 16th, 2022. It's Thursday. And tomorrow is June 17th, which is Friday. Well, why did I say that? Well, because tomorrow is options expiration for this month. It's the third Friday. So sometimes it creeps up on you. I know a lot of you forget. So make sure you take responsibility for what you got to close or adjust or roll. Hey, good news for anybody who's been holding long calls for the last couple of months. You don't have to do anything. I'm going to give you my 2 cents on the markets. I'm going to give you a couple of trades to look at. It's just my opinion. Take responsibility for the outcome. Let's get into the market analysis real quick. Let's get a breakdown on what happened today as the carryover from the FOMC meeting was pessimistic at best. Another big sell-off, and it was a gap down. Tried to muster a little bit of some consolidation or rolled over. Look at this. Dow, S&P, and NASDAQ all lower. Oil and gold up. So I'm seeing continued selling in the equities and a flight to safety in the commodities. Oil and gold both up for the day. This means this kind of panic that's going on in the markets is continuing. You guys need to keep that in mind. Let's get into some of the reasons why. So retraction showing up in economic numbers, the building permits and housing starts both lower. I expected that. That's why the Fed raises rates. They want to slow down the home purchasing and the home prices going up. And so far it's working. We got the Philly Fed Manufacturing Index that actually was negative for the first time since May 2020. Now the Empire State Index, which is also a manufacturing measure, has been negative the last 2 times it's come out. So we knew this was going to spill over a little deeper into the U.S., right? And it has. The problem is, and we talked about the soft landing in my Wednesday classes, is if this happens too fast, taking a look at the retail sales number where we're actually seeing the retail sales start to slow down, if the consumer slows down as quickly or as fast as these numbers, then we have a hard landing, which leads to the R word. Let's talk about it. So there's definitely pessimism in the markets. Now I said pessimism because there's no fear there yet. Let's jump into the chart. Now, boy, that chart sure as heck looks like fear. I don't know what you're talking about, Joe. Well, I'm just judging it off of the Volatility Index, which is kind of a fear index to the S&P. But it has moved higher, but it hasn't spiked. One thing that I do want to talk about is this. So this is the May 25th Fed meeting where they said, hey, inflation is peaking. We're seeing it's peaked. We're probably seeing the highest it's going to be. Here's our 50 basis point raise. And this is what the markets did. The markets love it when you do what you say you're going to do and when the expected happens. The markets hate when the CPI number comes out at 0.86 year over year versus 8.3%, which is 8.3% year over year was a 40-year high. We just exceeded that by 0.3%. What do? Well, guess what? The markets don't know. They don't know. They're just adjusting. They're reacting. The Fed has to react. The Fed has to adjust. Here's our Fed meeting yesterday where the Fed comes out and says instead of a 50 basis point raise, we got to do a 0.75% raise. The argument was out there for a full basis point, a 1% raise. However, what does happen is the interest rate raises have to be larger or more through the end of the year to get to the target inflation level, which has also increased. Rob made an awesome statement on Sunday. I believe it was Sunday. Came out and said, you know what? The markets have to readjust the expected pace that the Fed said they were going to do. Because now that this number came out, no one really knows how to adjust. So long story short, folks, we're just kind of in free fall mode. And what does free fall mode mean? Be cautious, be patient, don't look to bang the butt, to make all of your money in these next few days. I don't know where the bottom is. I don't know if we have a massive bounce. I don't know. It's kind of a free fall mode. Let's get to the cues, and I'll continue my point. You'll be able to see the capitulation when it comes to the absolute panic, which is the volatility index. When it spikes up, that means you're seeing forced margin closures. You're seeing all sorts of really catastrophic problems, which I don't want to see. However, these markets can't be trusted until they're done falling. They need to bounce, establish a support level, climb higher, move, and go forward from there. Now, we talked about this last point as being a pretty significant support level, and it was. This was a great level, and we bounced off of it, off of a controlled expected market, or I should say economy. Once that monkey wrench was thrown in the machine, it's over again, folks. We're resetting. So I guess if you guys are going to take anything from today's class, it's going to be we're still in reset mode. I don't know what's going to happen. I'll give you my 2 cents here in a second. So here's the heat map. Everything went down. You've got a couple of outliers, which will probably be very specific to news or its sector. But take a look at it. Energy, basic materials, utilities, all of it's down. Technology, everything's down. You got Walmart in there and ABBV and a couple of health cars and whatever, but everything just got smushed. The only thing that really bounced was the futures contracts in oil and gold, or precious metals, right? So that is an absolute flight to safety. We are still in, I'm going to call it, free fall mode. So where does that leave me? Easily -2 in the overall monthly outlook. Now, I went -1 for the weekly outlook because tomorrow is an expiration cycle. And more often than not, folks, this thing will gap up a little bit and then just move sideways, or gap down and move sideways, or gap down and then come back to neutral, or gap up and come back to neutral. It's usually a consolidation day when you have options expiration. That being said, taking a look at the last few days, we could still be in free fall mode. I don't know. We are going to get a massive, massive bounce. Hopefully it's not tomorrow. We can talk about it on Sunday going into next week and hopefully be able to prepare ourselves to play it. So on the trade side, I didn't have anything. You guys go through your watch list, pull up whatever you want, and I'd be really excited if you could find any bull trade that you're looking at that doesn't have at least 2-3 massively bearish candles over the last couple of days. If it doesn't, make a note of it because you could find something that's outperforming. I did something pretty generalized here. You can see at the top, USO, shocker. He's got oil up there. But it's a beautiful bull chart if you want to put something on bullish as this volatility continues. Now on the downside, I picked on a few sectors. You could see airlines, you can see agriculture, eBay, and I only chose eBay. There's anything consumer, anything restaurants, Amazon, anything consumer or retail is just getting slaughtered. So I want you guys to kind of look at those and take them for what they are. Now, trading them, it's kind of like catching a falling knife, or you feel like you're going to be chasing. Don't think that you have to trade today or tomorrow. Let's let things settle out, and we'll see what happens on Monday. Here's USO. It's been a great bull for a long time. It's been on our bull watch list for months. I've had this chart up 2 or 3 or 4 times even on Thursdays. I do like it again. It's a bull pullback with a big green candle on a rising 20-day moving average. So a flight to safety, throw something on there, diagonalize. If you've got a portfolio that's heavily bearish, you're worried about a bounce. Actually, if the markets bounce, this will probably fall, right? They kind of inverse. However, if you've got too many bears or bulls on and the markets continue down, this might be a little bit of a good hedge. I used Southwest Airlines. I didn't want to go through all of them, Delta or American Airlines. They all look the exact same. This is one was on a bear watch list from either Corey or Rob this week, or even on Sunday's room, and it looks great. Still looks good, but look at this. It's not even hesitating. It's not even trying to bounce, which leads you to believe if I've got higher energy prices, I've got worries about Southwest Airlines when it comes to their crews, canceling flights, and then now I'm worried about a consumer that might cancel their trips or not travel. So, insult to injury. Same idea here with agriculture. You've got a supply issue, you've got a demand increase, and then you also have higher costs, and not only just for maybe the equipment, but fertilizers, farming in general. So there's a big slowdown there as well. This is Caterpillar. Deere looks good. Anything in the agriculture sector looks pretty decent here. Let's move on to eBay. I just chose eBay. It was kind of funny, folks. I was actually just going through Amazon, looking at some other trades, and this one just kind of raised an eyebrow because if the retail sales is any sort of indication of what's going on with the consumer, eBay, Amazon, these are things that are the first to, I call it the fluff stuff. It's, hey, I need to buy these T-shirts on eBay, or I really need to get this authentic whatnot here. Instead of that, you're going to get, I would like to get an extra gallon of milk, or let's worry about a gallon of gas. Okay, I'm being a little bit more pessimistic. But these don't do very well in situations like this. Great chart, looking to fall apart. Not this one specifically if you feel like you're catching a falling knife here, folks, but this is where you want to search. So I guess today's kind of like, hey, where do you want to search over the next little bit versus actually physically going and get trades, because I still think these markets are in some sort of reset mode. I just see volatility coming in the next little bit until they find a bottom or figure out what we're going to do next. So there's pessimistic with active selling. There's no fear out there. Please keep an eye on that VIX. You will see fear when it happens. Capitulation will happen, and it will be a lot more than you think. So let's keep an eye on those highs of the VIX. I also said wanted to mention cryptocurrencies. I'm seeing a lot of correlation with crypto. When crypto falls, the markets fall. When crypto bounces, the markets bounce. Okay, chicken or the egg, I don't care. Keep an eye on this. Crypto has been destroyed. It's probably due for a dead cat bounce. You guys have heard that term. If not, we've got videos on it. So keep an eye on that. The markets might also bounce as well. So if they do bounce and there's nothing good in the economic news moving forward, or especially through the summer, we could have another opportunity to actually short these to the downside. Economics, you guys know it all. Worries of higher prices indicates that inflation is not yet peaked. Consumers showing signs of retracement or traction. This is all normal. If it happens too fast, I think the markets continue to waterfall. So earnings reports, we got Adobe. Adobe actually came out. I looked at it earlier. It was down about 16% when I got to it. I don't know what it's at right now, but they beat their numbers, but they projected lower moving forward. Next week, we've got Lennar, we've got Lazy Boy, KBH, Home Builders, Lennar and KBH. Be interesting to see how they do. FedEx, and then Darden Restaurants. Darden, once again, folks, it's a consumer. It's actually in a very good descending triangle or low base breakdown. I didn't have the chart up, but if you guys want to take a look at it, it's pretty decent. So it's kind of where you find it, guys. I'm just trading the market in front of us, and it is super bearish. It's super volatile. We could get reactionary bounces, so on and so forth. Going into options expiration, just do your best, and let's see what happens next week. Thanks for joining me, guys. We'll talk to you next time. Bye, everybody.